Okay. So the market's about to be open, um, and right now I just want to explain a couple of things that are happening because I'm in for the first time ever on this account. I'm in the S&P 500 in addition to the Dow 30, uh, the US 30. The reason for that being is there was a couple of instances where the Dow is just showing irregular behavior. And it's I've thought this for the last couple of weeks now, and just wanting to, not just because of my terrible account performance, but also because um, even if I wasn't trading at all, there was just some peculiar behavior on the Dow that now I've confirmed that you know what, I'm going to start looking at the S&P 500. First of all, the other indexes tend to follow a trend a little bit better. I should probably move out. And so like the Nasdaq always does this. The Nasdaq always goes up, not always, but the Nasdaq typically will go up more and down more than the rest of its brothers. It's always the leader to the upside and to the downside ever since because it's more tech oriented, and that's the era we live in now. S&P is a little bit more stable, but still, and it's a lot safer to predict movements in because it's a broader index. The Russell, I don't really have a good. Um, I don't really. It looks exactly like the S&P to me. I don't really have a good indication on the fundamentals of the Russell. This is the thing. This is the one that I look at the least, to be perfectly honest. Now, everything looks has like a solid uptrend since like the beginning of the year. But the freaking Dow, which is my bread and butter, it doesn't know what the hell it's doing. And I try to not let that get in my way, and I try to think about like, okay, no, it's stick with the plan and everything like that. But with this is indicative of my account balance as well, right? My account balance is just as choppy and as this market is compared to something that is following a lot more of a straight trend. And my strategy, the quarter strategy that I follow, is a trend continuation strategy. So hindsight is always 2020, but this is like the S&P 500 and the Nasdaq, which are they're less slippery of an index, right? The Dow, just even if you remove the fundamentals from everything and you equalize everything, the sheer fact that the Dow is you're moving like a 1% move is 300 points or 337 points in this case, um, is is huge, right? It makes it very slippery. The Nasdaq a little bit less so. A 1% move would be only 125 points, and we're in the business of gathering points, not percentages, right? We measure our success in percentages, but the trade value is determined by point value or tick value, pip value, whatever you want to call it. So it to me it makes more sense that I start looking at the other indexes now. I wanted to stick to my plan, but I mean I can't ignore the evidence. Trading something like this or like this is a lot easier than something that looks like this. And uh, the only way that I can justify this is if I shift up my strategy to adapt it to the pair, to the equity. Um, but I think it's less inertia, less change to adapt the strategy to no keep the same strategy but apply it to a different pair, which is fundamentally virtually identical. It's still if anything it's actually more stable. It actually makes more sense to trade the S&P. It's way more common. So that being said, I put I'm playing the minor levels, not the major quarters. I'm playing the minor levels in the S&P 500, so it's going to be slightly different. Same overall strategy, just the quarters are going to be slightly different. And I'm looking at the major quarters on the Nasdaq for now until the uh, the Dow gets back on track here and starts following the rest of its brothers. Now, um, this is a little bit dangerous because now that I'm looking at more charts, there's an increased chance of over trading. So the strategy needs to be appropriately adjusted. So I'm gonna start. I have my sets on the US 30, but I'm probably gonna stop putting sets there for now. I'll probably play this range, the short from up here, from right above the backup band from the major level at the 34,000, playing that short. Hopefully I hit this profit target at the 34,000. Hopefully this goes up. Um, I like the bearish engulfing, and hopefully it goes up. Another thing that really turned me off to the Dow that I should mention here is that the spread has been kind of ridiculous. 2 times in a row. So like this, if you look at this candle wick, it looks like it should have picked me up here and stopped me out, but it didn't because of the spread. I'm not gonna get into the details of that. It's not. This isn't education. This is vlogging, right? So it's like the spread of the bid in there. I wasn't watching what happened. I got alerted at 8:30 that it hit the 750. I was like, oh, that means it should have picked me up. But let me go down even to the 1 minute mark. Yeah. So in like, can I even go 5 seconds? Right. So it's like, this is thank God I have Trading View. I'm going down all the way to the 1 second chart. Let's go to the 1 second. Something happened. Some news came out. I didn't even look because I wasn't paying attention. This isn't how I spend my. In 1 second, it went from. It gapped down from wherever it was before. We should probably look at the futures. Nope, that's not going to work. All right, let's just. Oh, that's so annoying. Oh, why did I do this to myself? 8:30. There's that gap. Okay. So this is a 1 second chart that I have only because I have the highest paid or the most expensive version of TradingView. So in 1 second, it went all the way down to 775 ish, and then in the next 1 second, it gapped down from all the way to 650 or what does it say, 656, which honestly, like, it should have picked me up there, but my limit order was set at 750 something. So where did I get picked up on? My average fill price was a full 5 points. No, 5.1 points below what I set it at, which is a good thing because it's a limit order, right? That's what a limit order means. I want 750 or lower, but you rarely get it 5 points lower. That's really big, and that's because of the volatility of the gap and like the imbalance that happened. There was news that came out that caused this to happen. But that's not the only time something like that happened. Let me zoom out again. The other time that happened, and this is also partly because this is a CFD market, so you get that you get less liquidity. So this one right here. So this candle stopped me out, but didn't stop me out at the 34,075 ish area, but it didn't pick up this order, which would have been a beautiful win. It didn't pick up this order because of the spread. Because at the time, the close of the candle will be revealing. So the high of this candle is 34,074, which was apparently enough to stop out my short, but not enter this limit order. So it's right at that mark where like I didn't get picked up. I got stopped out on the spread, but I didn't get picked up on the entry because of the asking price. All right, the bid was lower, and I got stopped out. The ask was still higher. So little things like that are happening back to back. Like this cost me. I mean, this is really no one's fault. This is just luck. It's just how the game is played sometimes. Um, this would have been perfect though. I would have had this to down to probably. I think I usually set it at the seven. No, wait, hold on. Yeah, I set the thing at the 750. So this would have been $130, as it says right there. Okay, which is a big win in this size account. That's almost a 1% win when I'm risking like point 0.3 or less than 0.3% on a trade, right? That's a big win for this size account, and I missed out on it purely because of the spread. So little things like that are pieces of evidence, objective evidence, not just me going on tilt and wanting to do something new. So I'm gonna hopefully this works out on the S&P 500. I'm going to put a minor level, so every 100 points above and below the upper and lower bands for the minor levels are 25 points. So the risk reward is actually better. For the full move, it's going to be a full 4-to-1, and it's easier to calculate too. It might be easier to express and calculate. So a lot of things. There's a lot of benefits and advantages here. The risk reward is 4-to-1. On the if I front run the front band, it'll be 3-to-1. 25 to 75 in this case. It's also easy to calculate because one lot is $1 per point. A lot of things become a lot simpler looking at the S&P. So hopefully both of these work out. Hopefully both the S&P and the Dow move up a little bit together to make a new high on the S&P. We'll see.